Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, July the 11th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. Not the most robust economic data across the pond, but we did get German final CPI, Consumer Price Index, came in at 0.1%. French final CPI came in at unchanged, expected to be 0.1%, so pretty much in line with expectations there. We also had the ECB monetary policy accounts, which is basically just their minutes for their meeting. And then back here in the United States, we got CPI, which is Consumer Price Index month over month. That's kind of judge of inflation in a sense. Came in at unchanged, expected to increase by 0.1%. Came in at 0.1%, expected to be 0.2%. So a tenth of a percent less. Also, core CPI, stripping out food and energy, came in at 0.2%, was expected to be 0.2%. Unemployment claims came in at 214,000, expected to be 226,000-ish. And natural gas storages came in at 51 billion cubic feet. And it was expected to be 55 billion cubic feet. Later on today, we have Powell speaking, and the Fed budget balance, which isn't really that big of a deal, but Powell may say something important. All right, on to the overall markets. Crude oil breaking below the $70 mark. I didn't think we'd see that happen necessarily. I thought that was pretty much out of the cards, but once we broke below the 61 Fibonacci extension, that was the next line in the sand would be go down to the 50 Fibonacci, and that Fibonacci is on like a 3-year chart. So just keep that in mind as well. But it's lining up with the 50-day moving average, the 50-day moving average and the 50 Fibonacci level. That should act as a major support, especially with that build. That's got to be in the back of everybody's minds that we had 8.5 million barrels 8.5 million barrel drawdown. We would expect this from a build, but a drawdown, I would expect that to really start rallying. So kind of trying to pick my spots on when I'm going to play oil to the upside. It's not looking that great right now, although we're finding support here. I'd like to see a little bit more of a confirmation to the upside. It just seems a little wacky, a little counterintuitive right now. All right, so crude oil coming off by another dollar or so, but the major thing is it broke below that 70 psychological level, and now we are on support. Gold trying to make a little bit of a comeback here after yesterday's big sell-off, breaking below the 50 Fibonacci level. There's not a whole lot of support here other than this bottom right here. So that is a line that we need to keep an eye on. As a matter of fact, I probably should draw a line on there because that's tweezer bottoms. That's a major support area. So I think it's going to try and push away from that, at least for the next few days. Bitcoin off a couple of $100 right now. Again, still not seeing a lot of volume and a lot of participation at these levels. Bonds unchanged. Talked about this. There's no real room for the bonds to move right now. Economic data is coming in hunky dory, I guess. It's nothing great. It's nothing to write home about, but it is coming in decent, and it's showing expansion in the economy. But having said that, it's not like we're seeing massive inflation. We saw that in the CPI. It's not really there. That would make the Fed want to increase interest rates, but we're not seeing that. So increasing interest rates is generally used to cool off the economy, not to adjust rates for your balance sheet, which is what I'm worried the Fed is going to start doing. All right, VIX back into the 12 handle, out of the teens, no longer. But today, big pop, in the equities. I talked about this again yesterday, back and forth. It's that line in the sand is not going to necessarily act as a support and resistance, although it's looked like that in the last couple of days. It's really just toggling back and forth like I said it would. It's because of that point of control where the time and volume has been spent. That's where people are exchanging. So it's not going to act as a support and resistance. I don't know how else to explain it. All right, NASDAQ up almost 100 points. Yesterday finding support on that 50 Fibonacci and the extension here. But that being said, this pattern here, when we get these counter-opposing dojis, that is a continuation pattern, which we're seeing here. And I'll talk about that with Facebook as well. I saw that similar situation. But here again, counter-opposing dojis, continuation pattern. E-mini S&Ps up 17. This is the daily chart of the E-mini S&Ps. Nothing really to see here other than they didn't try and flush out overnight inventory from the long side. So market maybe right on the open. They tried to flush them out a little bit, but for the most part, it didn't seem like that aggressive. Facebook. Let's talk about some of the trades that I've done or taken off with Facebook in this regard. With Facebook, I had on this trade for a gamma. Remember, I put this on in the short duration July that expire in like 8 days. And with that being said, like I said, it's all a gamma trade, but didn't work out. Maybe should have covered this yesterday with that pullback, but I thought I would have a little bit more than 3 days of a sell-off. Squeezing it out one more day to see what happened, and it didn't work out very well. But that's how we play it. I went into the July and sold the 207.5 calls in there. Got nice market movement, especially yesterday. Thought about covering, but I thought I'd wait and see what happened today. New high. I'm out. I talked about this. It was all about a chart setup. I'm out on the breaking of that technical move. So with those 207.5 calls that I sold for $1.62. I had to buy them back for $1.95. So a little bit of a loser there, but happy to get out of it. Technical pattern broke for me, so that's what it was. It was just all on a technical trade. All right, NTAP. Playing this to the upside, broke out of this little range here. Probably would have been a good trade for maybe a short straddle or something like that. Maybe I think it'll stay within that because we're going to get some volatility coming back in. But with that being said, in NTAP, I went in there and just sold some puts. And I went in and sold the July again, sold the 80 puts because they got earnings coming up in the next month. So I'm just doing this gamma stuff right now just to get me into next month until we start getting these earnings again. And sold the 80 puts, like I said, for 58 cents. So playing this to the upside in NTAP. And that's about it. That's all I've done today. But today's webinar is going to be on the it's going to be on the long put butterfly, but we're going to break that wing and we're going to turn it into a credit. And we're going to completely eliminate the upside for these stocks. So check it out. Yes, it's a put butterfly, broken wing. And when you break that wing, you eliminate all the upside. You can go online and figure out how to set this up, skipping a strike, all that stuff, but they're not going to tell you the strike location and how to set this up to increase your probabilities of success. You can set this strategy up where you've increased your risk. And I'll talk about all of those things in today's webinar, all about that strategy and how to set it up. And if you don't set it up the way that I said, you need to walk away from it, all right? So ProTraderStrategies.com, and if you can't take that, take it easy.